Okay, traders. Yeah, it is another day and it is Monday again. And as usual, I'm going to share something a little bit quick, so you can, you can stay with great attention actually to get something. And specifically, it's based on weekly analysis. Always I've been doing on weekend, but it's the second weekend actually. I'm getting busy over the weekend, so I try to do it on Monday at least when I'm getting back into charts. So now actually I want to share something, and basically my analysis as usual, I do a top-down analysis, and it will be continuation of what I shared last week, and actually it is continuation of just even last year actually, because in higher time frames we have a certain wave count that is just in progress actually since last year, and we keep on counting. It has not yet violated, so we still keep on looking that if it is going to be respected actually, it will be a very beautiful continuation actually from last year. So let me start with weekly analysis, and basically in weekly time frame, actually I have done many wave counts. So to some people they can find that it is maybe weird or anything else, but for those who know wave counts, they can enjoy what I'm doing here. So I'll incorporate wave counts plus what we call the price action things. I'll use the price action tools, things like trend lines, support and resistance, and I'll incorporate things like Fibonacci. So if you don't know wave counts, actually don't think that you will be left behind. No, you will have something to get from what I'm going to share here. So this is called, in weekly time frame, I can remove my wave counts. Basically what I can consider in weekly time frame is rejection. Now I have some rejection in a previous week, and also this week has opened with a push to the upside, and now it is pushing to the downside. So that's very important. So this shows that at this region always we have sellers, and in addition to that we can have a trend line. We can develop from any point, but we have a trend line that's passing through this area. We'll have a trend line that's passing through this area. So we can develop it this way, or we can have something here. Yes, this one, the most recent, this one. So you can have those two trend lines, but I think this most recent is very beautiful now. This one is very beautiful. So looking this trend line, you can find that the market is approaching a very important level where it was rejected in our previous. And also at the same time, for those who use the price action things, and we can use this resistance, it was the resistance, so it's approaching that resistance. So it seems like it still have some movement to the upside. So this is just an overview in a weekly time frame, and mainly I've concentrated with those rejections. That indicates that we have at least the sellers at this region, even though they are not very serious rejections, and therefore we can expect some little bit push to the upside in order to reach those key levels that I've indicated there. So this is weekly. So let's move to other time frames, lower time frames. Now in daily time frame, now I'm going at least very quickly in order to have a very short video. So in daily time frame, I can talk about the indecisions as usual. We have this indecision candle. Now always it pushed to the upside, but now sellers came in and pushed it at least to around the area where the price opened in this candle. So after this, then we found that the next candle has got sellers, so it closed in a very at least very big body, bearish body, and then the next candle, and this is the daily candle now, today's candle, always it opened by pushing to the upside, and then that sellers come in pushing to the downside, and even now we still have sellers pushing to the downside. So this is an indicator that sellers are existing at this region. So now this is very important, and also we have a sort of divergence. If you know the idea of divergence, now we can compare those corresponding regions. Now corresponding regions in price chart are with those regions in RSI. So you can incorporate this. So this one has formed a higher. Now we have the higher, but now in the RSI, those regions they are equal now. In this region, those corresponding regions in RSI, they are equal, but in price chart always there is formation of a higher. So this shows that the upward momentum is fading out. Now this divergence shows that the upward momentum is fading out. So this is just an indicator that at this region, it doesn't mean that we are going short now. No, we have to wait. Always money in the market, they are made by waiting. So we have to wait at least to see some confirmations. But now we have at least some informations that market is going to push to the upside, to the downside. So we have those we call the divergence. And also we can add something, we call it as a daily order block. For those who know the idea of order block, to the upside there, maybe I can put this a deep color. So we have a deep white now. So we have this, the last bullish candle, a last stronger bullish candle. So after closing, then we had next bearish candles and everything. So price moved very far and it has never came back again to that region. And now for the first time it is approaching that region. It has at least hit that region, but not that exactly. So we still expect that price is valid to keep on moving to this region, but it must not break beyond this. So it is still valid for price to keep on pushing to the upside without breaking this region. So this is based on the idea of order block. So if we at least see sellers coming in around this region, so it doesn't mean they can take prices straight to the downside. No, buyers may come in again, push it a little bit up, but they must not break this region. If they are going to break this region, now it will be a very new idea or a very new market structure that needs us to analyze it in a higher time frame, because since last year we had a triangle idea that is still respected. And always this market structure from this area, all these candles, they are moving to the upside in difficulties. If you find, if you want to compare now, you can find that this move to the downside was very stronger, or this previous move to the upside was very stronger. But this move around this whole area, it's actually movement to the upside with very difficulties. So this is clear that this is correction. So we expect a very powerful push to the downside now. We expect a very powerful push to the downside after completion of this correction. So now I'm going deeper in the lower time frames to see what's exactly expected to happen now. Additionally, the additional thing in daily time frame, I can add the Fibonacci thing, the Fibonacci retracement. A retracement, now we had this move to the downside, the 1, 2, 3, 4, 5 up to this area. This was an impasse. So this upward move is correction of this impasse. So how deep has it corrected now? So we can measure the Fibo thing and we'll find that it is moving. Now it is above 61%, but it is still approaching the 78%. So if it's going to move a little bit to the upside, it will be approaching the 78%, which is very key to for the market to return to the downside. So that's very key in daily time frame. So moving 4 hours. In 4 hours, we have some key things, and basically they are based on wave counts. Now we had this A to the upside in white color, then B to the downside, and finally we had the C to the upside. So this ABC to the upside, it was completed, but after completion, the market clearly formed the A, another corrective structure to the downside. So this one was an indicator that price is correcting this upward move, so it will keep on moving to the upside. So this movement to the upside, it is correction. It is correction of what was moving previously in the upside. So we have the ABC to the downside. This is correction of this previous move to the upside. So this complete, now this next move to the upside, it is completion of the bigger correction that I have labeled it as a WXY. So this, now this WXY, this will be the whole move in a correction of this 1, 2, 3, 4, 5 to the downside. So that's this WXY completed. So as we go deeper in a lower time frame, we'll understand exactly what is happening. So now always we have this WXY, then we have this move as an A, now in white color. It has got 1, 2, 3, 4, 5 to the upside. Then we have this ABC in a correction of this 1, 2, 3, 4 to the upside. Now market is still moving in an impassive move. So this impassive move is in a completion of wave C. So now what do we expect now? Always we expect wave C to have this 1, 2. This is stronger, maybe was 3. So now after this is 3, probably we already have 5 to the upside, or this whole move is 4, so we still look for the 50 to the upside. Anything is possible around this area. Anything is possible around this area. So I'm not going to label this unless the market has done something. That's why you have to wait in the market. So market must do something around this area in order for me to have a clear picture of whether the 1, 2, 3, 4, 5 is valid, or the 1, 2, 3, 4, 5 is valid, because we have this. We have this 1, 2, 3, 4, 5. This may be valid also. So probably I can put this as my preferred count. I can put this as my preferred count. So my alternative count, I will be looking for another push to the upside. That will be an alternative count. But my preferred count is the 1, 2, 3, 4, 5 to the upside. And so now if this is the 1, 2, 3, 4, 5 and it has been completed, so we will move this W to this area and this X to this area. So we are going to do this later. That's why we trade on Tuesday, because we need on Monday market to complete some formations. Then on Tuesday we will be clear with exactly what is happening. So now that's in 4 hours, and also we have the idea of trend lines. Maybe I can add this. We have this trend line. So probably if market is going to move to have another move to the upside, so it will be in a completion of retest to this trend line. So that's also possible. Now maybe moving to 1 hour time frame, I can have a clear picture of what is happening here. So in a hourly time frame, maybe I can have a WXY idea in a correction. Maybe if the market is still going to move to the upside, so this will be my W, X, finally Y to the downside. Probably it may work. But also I can have a diagonal idea, because I have 1, 2, 3 to the downside, then 1, 2, 3 to the upside. So sometimes I can have a diagonal idea. If the market has already completed with the 5th wave at this area, so this move can be a diagonal that has got 1, 2, 3, 1, 2, 3 up. So we'll have 1, 2, 3 to the downside. So that's also possible. So my suggestion now in a hourly time frame, what are we going to do? We have to wait for the market either to move below this area. Maybe I can reduce this in the intensity of color. So we have to wait either for the market to move beyond this area to the downside in order to prove the 1, 2, 3 to the downside. And also we have another alternative. We can wait for the market to move above this area, above the 50. It must move above the 1847. That is 1847. We have to look for the market to move above 1847 or 1848 in order to confirm the completion of the 50 to the upside. And also we can look for the market to move below the 1827 for us to confirm the beginning of the 1, 2, 3, 4, 5 in a diagonal pattern. So that's how we are going to do. That's all for today, and this marks the end of our today's video. So you have to mark those key points. You have to see what the formation is happening here, because it is not yet clear actually, and always you must wait until you have confidence with the pattern in order to make a trading decision. So our decision have got those 2 significant areas that will confirm what is exactly happening. So thank you for your time, and make sure that you subscribe this video, this channel, you like this video, you share it, and also you put your comment if you have any question or you have any suggestion. So thank you for your time, and welcome again to Awesome Forex. Welcome for the next time actually.